Hi everyone, I'm Brien Lundin of Gold Newsletter, and I am here at the Vancouver Metals Investor Forum. It's a raucous and excited crowd, lots of opportunities, rollicking metals prices, and some really great companies here. I have the great pleasure of talking today with Luke Alexander, who is the president and CEO of Newcore Gold, a company that's been a long-standing feature in the Gold Newsletter portfolio to the great reward of our readers, but has much more to go. And Luke, there's a lot of aspects to this story. I think we need to first set the stage for our audience about what your Enchi Gold Project is in Ghana and the resources and the stage of development. Then I want to get into what the future may hold.
Yeah, absolutely. So our Enchi project in Ghana, it's a district scale exploration project that's fundamentally underpinned by very robust economics that we put out in a 2024 PEA, which we're now in the process of taking from PEA to PFS. So doing a lot of de-risking work to move it along the development path. And we see that as a major catalyst for the company. We will put that PFS out towards the end of the first half of this year, so in the next 6 months. But then we are also in the midst of a 45,000 meter drill program, and we're focused on some high grade opportunities that we've identified across our project. And we've started to put out some press releases outlining some of the results that we've had from that high grade drilling that we've been doing to start the year.
Yeah, 45,000 meters. Your current resource is at what size and at what average grade?
So our current resource today, we sit at 740,000 ounces within the indicated category. We've then got another 970,000 ounces within the inferred category. In terms of the grade today, we sit at about 0.6 grams per ton. Important to highlight that when you look at that 2023 mineral resource that we put out, we did use 1650 pits for that mineral resource. So needless to say, in today's gold price environment, along with the additional drilling that we've been doing.
$1,650 gold price. Okay. I haven't seen that in a lot of years. So well, that's remarkably conservative.
Yeah. And so obviously in today's gold price environment, I mean, there's a huge amount of leverage to the gold price that our project ultimately provides, both from a study perspective. So when you start to look at the impact that it'll have on the PFS, but as well as the impact that it'll have on the resource, those are very positive. And obviously that leverage is something that us as management and board, who own 15% of Newcore, are extremely excited about.
Yeah, that's a good point, because in your presentation today in front of the audience, I was really amazed, and reminded and amazed at the economics you already have on the project. They're really extraordinary. The IRR is extraordinary, the NPV is extraordinary, but you highlighted what higher gold price does. Every $100 adds some $50 million. Every $100 in the gold price adds some $50 million to your NPV. Real leverage, which is obviously such a key in this kind of a gold price environment. You want to invest in those companies that provide that kind of leverage. That's the financial leverage, but that also gives you leverage on the size of the deposit as well.
Absolutely. So again, 1650 pits is what we used in our previous study. We've done a lot of additional drilling since then. A lot of it has been focused on resource conversion, so moving ounces from the inferred to the indicated category, which is one of the key things to de-risk the project and be able to produce the PFS. So with our 45,000 meter drill program, that first 30,000 meters was focused a lot on that resource conversion. We think we've now been able to complete that portion of the drill program. And now with this additional 15,000 meters and any additional drilling that we do beyond that, which we're expecting to do this year, that is focused on the high grade opportunity. I'm glad to hear that you were listening in the presentation and you're spot on. So when you look at our project, obviously there's lots of new companies that are coming out in this kind of gold and precious metals price environment. But when you look at Newcore and our Enchi project, we've got that fundamental underpinning of value. So you can go to our website, you can pull the 340-page technical report that goes into a lot of detail of what this would look like as a producing mine. When you then flow the gold price through that project, as you just highlighted, and I'm glad to hear you were listening in the presentation.
Yes, I was.
For every $100 move in the gold price, our project adds roughly $50 million to the NPV.
Yeah.
So there's tremendous leverage to the gold price with the economics that have been outlined within that study. And then beyond that, as you also touched on, once you start to look at the resource and the growth that it potentially adds by using higher prices with the pits, that's a meaningful benefit for us as well.
And when you're talking at real multi-million ounce potential, I think comparable to the history of mining in Ghana and the other projects in Ghana, Newmont's Ahafo North project is amazing, and they're developing going forward with that. Great history of mining, really large projects. What really intrigued me when I first recommended the company to my readers, and everything else was great, and it was a wonderful company, but the potential at depth. You have a great slide that shows the comparison of the resources you have drilled out so far compared to the depth of mining that's been done at a neighboring project that is a clear analog to what you have, as well as the typical project in Ghana. So explain to us that kind of potential, which you're realizing right now with your high-grade drilling.
Yeah, so when you look at Ghana as a whole, it's been called the Gold Coast for thousands of years because it is so well minerally endowed. You've got some of the largest deposits on the planet in Ghana, including Obuasi at 66 million ounces, Tarkwa at 25 million. Newmont's Ahafo project, where they've just invested an additional $1 billion into, it sits at 20 million ounces today and growing, sits along the same belt to the north of us. The project you're referring to, the Chirano mine, it has an endowment of 5.5 million ounces, sits on the same Sefwi Bibiani belt that we sit on. And when you look at our project, and the slide, I would encourage anyone listening to go have a look at it in our presentation, the average vertical depth of the drilling that we've done to date is only down to 100 meters.
Right.
So we've really just focused on that near surface open pit opportunity that exists across our project. But when you look at Chirano and Ahafo, Newmont's project, and Obuasi, where a lot of these deposits really grow in size and increase in grade is as you start to identify these high-grade feeder zones that exist. Interestingly, if you look at Chirano, from when they put out their initial reserves on the project about 20 odd years ago, that resource has grown by about 6.5 times. When you do the same at Newmont's Ahafo project, it's grown by about 5 times. So one of the opportunities we see is, yes, continue to grow the near surface resource because all of our deposits remain open along strike. But this opportunity at depth, and for us at depth today, is still only 200-300 meters below surface, so relatively shallow. But that our opportunity is a significant one, and we see it as a way to meaningfully increase the overall ounces. So for the first time in a number of years, we're starting to do some deeper diamond drilling, targeting that 200 to 300 meter zone below the existing pits on our project. And in 2026, we've started the year with some great drill results.
Remarkable high-grade results.
Absolutely. We had our 4th best grade meter intercept ever on the project. We put that out second week of January, 174 grams over a meter. Within that press release, you'll see we also intercepted 3.5 grams over 23 meters. But within that, a nice high grade zone as well of 7 grams over 8 meters. Last week, we put out additional drill results and had our first ever visible gold on the project, 147 grams over a meter. But within that, we also had 3.2 grams over 17 meters. So this is starting to prove out our geological thesis and understanding of the project, is that as we identify these high grade zones, there's an opportunity to meaningfully add to the overall resource and the mid to longer term potential of the project.
Yeah, and it's easy to see, as I said, from that slide, you can see just from a layman's perspective that the resource could easily double or more just by going deeper. As you said, everything's open along strike. The numbers already on the very sizable resource you already have are, and I encourage people to go to the website and look at the economics that you have. You don't often see this larger project having IRRs like we're talking about, and then they just get silly at current gold prices. A big year ahead, lots of catalysts, a lot of drilling, a lot of drill results, just what the market wants to see. Big year of growth ahead for Newcore. And Luke, thank you for telling us all about it.
Yeah, thanks a lot, Brian.